Beyond Bitcoin, it's more than just digital cash. Cryptocurrencies, you've heard of them, right? Bitcoin, Ethereum, Dogecoin, the internet's favorite digital currencies. But here's the kicker, folks. Crypto isn't just about buying your morning coffee with virtual tokens. It's evolved into something much bigger, something the financial world is still trying to wrap its head around. Think of it as a new type of financial asset, like stocks or bonds, but with its own set of rules and a whole lot of volatility. We're talking about a new asset class, one that has the potential to revolutionize how we think about money and investment. Cryptocurrencies, at their core, are digital assets designed to work as a medium of exchange. They use cryptography to secure transactions and control the creation of new units. Unlike traditional currencies issued by governments, cryptocurrencies operate on decentralized networks, typically a blockchain. This decentralized nature, combined with the potential for high returns, is what has investors and financial institutions buzzing. Buckle up, because we're about to navigate this brave new world of crypto assets and understand why they're causing such a stir in the financial landscape. Now, the traditional financial industry, with its pinstripe suits and aversion to anything that disrupts the status quo, has a bit of a love-hate relationship with crypto. Some of the big players like JP Morgan and Goldman Sachs are dipping their toes into the crypto waters, offering crypto-related services to their clients. They see the potential, the innovation, and maybe, just maybe, a chance to make a boatload of money. But then there are the skeptics, the old guard who view crypto with the same disdain they reserve for cargo shorts at a wedding. They see it as a volatile, unregulated playground for speculators and criminals, and let's be honest, they're not entirely wrong. Crypto has had its fair share of scandals, hacks, and scams, enough to make even the most seasoned investor a bit wary. Think of it like this: gold. It doesn't generate any income. You can't really use it to buy groceries, unless you're really fancy. But it's considered a safe haven asset, a hedge against inflation. Crypto, in a way, is similar. It's a store of value, not directly controlled by governments, and its value is determined by market forces. The question is, will crypto mature into a respected member of the financial system, or will it fizzle out like a bad Bitcoin joke? Only time will tell. Here's the thing about cryptocurrencies. They're volatile, like really volatile. 1 minute you're up, the next you're down, and then you're doing the crypto conga line, unsure of which way is up anymore. This volatility makes cryptocurrencies highly speculative. What does that even mean? Well, it means their price is primarily driven by speculation on future value rather than underlying economic factors. Think of it like this: people are buying crypto not necessarily because they believe in its long-term utility as a currency, but because they hope to sell it later for a profit. It's like buying a Beanie Baby not because you love its beady eyes and soft fur, but because you're convinced it'll be worth a fortune someday. Now, this isn't necessarily a bad thing. All investments carry some degree of risk, and speculation plays a role in most markets. But with crypto, the speculative element is amplified. It's a high-risk, high-reward game, and it's essential to approach it with caution, due diligence, and maybe a defibrillator on standby. For years, the traditional investment world has been neatly categorized. You've got your stocks representing ownership in companies. You've got your bonds, essentially loans you give to governments or companies. Then there's real estate, commodities like gold and oil, and let's not forget good old cash. These categories have been the building blocks of investment portfolios for generations. But now cryptocurrencies are crashing the party, demanding a seat at the table, and maybe even asking to borrow some sugar for their digital coffee. They don't fit neatly into any of the existing categories, so they're creating their own, the crypto asset class. This new asset class represents a fundamental shift in how we think about investment. It's like discovering a new species of animal that doesn't fit into any existing taxonomic groups. This new asset class is attracting a diverse range of investors, from tech-savvy millennials to institutional giants, all eager to be part of this financial revolution. It's a brave new world of investment, and cryptocurrencies are leading the charge. Section 5. The 24/7 crypto casino, always open for business. One of the most defining features of the crypto market is that it never sleeps. Unlike traditional stock markets, which operate within specific hours, The crypto market is open 24/7, 365 days a year. It's like a casino where the roulette wheel never stops spinning and the blackjack dealer is always ready to deal you in. This constant activity is both exhilarating and exhausting. It means that prices can fluctuate wildly at any time of day or night, creating opportunities for quick profits, but also increasing the risk of sudden losses. Imagine waking up in the middle of the night to discover that your crypto investment has plummeted in value because someone in a different time zone sneezed and accidentally sold all their Bitcoin. This 24/7 nature also means that staying on top of the market requires constant vigilance. You can't just set it and forget it like you might with a traditional investment portfolio. This constant activity attracts traders who thrive on volatility and are quick to capitalize on price swings. Welcome to the crypto casino where the house always wins and the only guarantee is a wild ride. Section 6, Crypto Cowboys versus HODLers, different strategies, different goals. In the wild west of the crypto market, there are two main types of players, the traders and the HODLers. Now, before you think HODL is a typo, it's actually a term coined by a crypto enthusiast who misspelled hold on an online forum. It's now become a rallying cry for those who believe in the long-term potential of cryptocurrencies. Traders, on the other hand, are like the gunslingers of the crypto world, quick on the draw and always looking for the next big score. They buy and sell frequently, trying to capitalize on short-term price fluctuations. They're in it for the thrill of the game, the adrenaline rush of a successful trade. HODLers, on the other hand, are more like the patient prospectors, panning for gold. They believe in the underlying technology and long-term potential of cryptocurrencies and are willing to ride out the volatility. These two approaches require different mindsets and strategies. Whichever approach you choose, remember that the crypto market is a marathon, not a sprint, and it's important to pace yourself, manage your risk, and never invest more than you can afford to lose. Section 7, spice up your portfolio, crypto for diversification and passive income. Now, let's talk about diversification. You know the old saying, don't put all your eggs in one basket. Well, in the world of investment, diversification is key. Cryptocurrencies, with their unique characteristics and low correlation to traditional assets, can add a dash of spice to your investment portfolio. They can act as a hedge against inflation, a store of value independent of central banks, and potentially a source of passive income. Think of it like adding some hot sauce to your scrambled eggs. It's not for everyone, but it can add a kick and enhance the overall flavor. Similarly, adding a small allocation of crypto to a traditional portfolio can potentially boost returns and reduce overall risk. But remember, a little goes a long way. Cryptocurrencies are still a highly volatile asset class, and it's crucial to invest responsibly and within your risk tolerance. Section 8. Bitcoin, Ethereum and beyond, a glimpse into the crypto zoo. The cryptocurrency market is like a vast and diverse zoo, teeming with all sorts of exotic creatures. You've got your majestic lions like Bitcoin, the first and most well-known cryptocurrency. It's the OG, the trailblazer, the one that started it all. Then you've got your agile cheetahs like Ethereum, a platform that not only allows for transactions, but also supports smart contracts and decentralized applications. But the crypto zoo doesn't stop there. There are thousands of other cryptocurrencies, each with its own unique characteristics, strengths and weaknesses. You've got stable coins, which are pegged to the value of fiat currencies like the US dollar, providing stability in a volatile market. Navigating this crypto zoo can be overwhelming, but it's also incredibly exciting. But remember, just like in a real zoo, it's important to be aware of your surroundings and not get too close to the cages. Section 9. Don't get scammed. Knowledge is power in the crypto Wild West. Now, before you saddle up and head into the crypto sunset, let's talk about scams. Because, unfortunately, the crypto world is not all sunshine and rainbows. In fact, it can be a bit of a Wild West out there with scammers and fraudsters lurking around every corner, hoping to make off with your hard-earned Bitcoin. Think of it like this. You wouldn't walk through a dark alley flashing a wad of cash, would you? The same principle applies in the crypto world. You need to be aware of the risks, protect yourself, and never, ever give your private keys to anyone. Education is your best defense against scams. Take the time to learn about different types of crypto scams, how to identify them, and how to protect yourself. The crypto world is full of opportunities, but it's also full of risks. So be informed, be vigilant, and always do your research before investing a single Satoshi.